And for some reason, they want me to. So what we do is we're going to go live, and I can see both of you, which is good.
Good.
And we're starting. And so this is the Best of Investing radio show for. Not sure if we're going to be on the 19th or the week after, but we've got to record 56 to 59 minutes. So what we're going to do is we'll do our show, and if we have some extra time, we'll tell some jokes or something. And for those of you watching TV for the first time, this is the Best of Investing radio show, and we're on CMCM. We record a radio show that airs on KDOW 1220 on Saturday and Sunday at 7 a.m. on KDOW and KTRB 860 The Answer. And if you guys are ready,
Yes.
we are ready to go. Patty, you want to do a quick mic check? I want to make sure that your mic is working.
Yeah. Hello? It's on.
Okay, so sometimes that one gets a little bit funky.
My Scotch tape is working.
Yeah. Go ahead.
Hello?
No, I don't hear you yet.
Yep. Okay, let's try mic number 4.
Sure. This one?
Go with Scotch tape and
Ah,
tissue.
there it is. Okay.
But that was going on and off too.
Let's see here. Let's get this.
I don't want to mess up. I don't want to put a wire the wrong way and then it's off.
There you go.
Okay.
Okay.
Hello?
Yep.
Hello?
Okay. So once we get it set, we'll set. Right? Go ahead.
No more talking. No more talking.
Okay. Perfect.
Okay.
All right. And you got the times there. Right there. Okay. You guys ready?
Yeah.
And away we go. Well, welcome. You're listening to The Best of Investing. I'm your host, Edward Brown, along with my co-host, Mark Hanf of Pacific Private Money and Patty Cohen of Pacific Union International. Our phone number is 888-912-1190. Use that number to answer the trivia questions for a 5-pack tanning certificate given away during the show. And the certificate's not sponsored by the radio station, but by Tan Bella Tanning Salon with 2 locations in San Francisco and 1 in Marin. Today's trivia theme is celebrity trivia. Oh, we had.
Oh, something different.
Yeah, we do the general
Trivia, which I always lose at.
Yeah. Well, I think
celebs.
you'll
I'm
do-
a local celeb, right?
that's right.
We're local celebs.
Well, that's true. Gotta get ourselves in the IJ
You
somewhere.
know, legends in our own minds.
Yes, of course. All right, Patty, what do you got for us here?
Well, it's an interesting market. I would like to say schizophrenic market, maybe.
Schizophrenic market. I
You
like
know,
that.
so entry-level homes. I mean, in Nevada particularly, I hear entry-level homes, which is $1 million these days. Somebody got 35 offers, 27 offers.
Well, they're flying off the shelf because, I'm reading the weekly closings in the last couple of weeks. Oh my God, especially Nevada. So Northern
Well,
Marin
that's my point,
lot of
especially Nevada,
closings.
but it's schizophrenic in that the over 3 million market has really shifted.
Slowed down,
It's
hasn't it?
soft.
Yeah.
I mean, just literally an hour ago, I was looking at days on the market this month versus last year, this month,
Mhm.
year over year, days on the market is up. Percentage to asking is closer or below asking.
What do you think the economy's doing well, but is it just buyers getting a little skittish?
I think buyers are getting a little skittish because this is, again, the lowest inventory we've ever had. The year-over-year inventory is down, but yet properties are not selling. And yet we still do get some multiple offers in that price range. So it's like those primo properties that everybody wants, they go after. Everything else kind of sits.
And so it's important. That brings up a really important point in that you have to look at the sub-market. Not only is it neighborhood by neighborhood, but it's price classification. So I know, like, for example, Case-Shiller, when if you do a deep dive in their data, you could look at, well, year over year nationwide, right? Prices are up X%. Year over year in the San Francisco Bay Area, they're up in the 7 to 8% range. But when you really dive even deeper, they segment in 3 areas: below $1 million to like 3 or 4 million, and above, and above 3 million. So, and there's vast differences in sales and price appreciation in those 3 market classes. Number 1 and number 2, where you're buying. That may not be the same in Silicon Valley, where just a $1 million home in Nevada would be selling for $3 million in Palo Alto.
Maybe, yeah.
And so it's a very interesting dynamic how, it's hard to generalize about the real estate market, although we tend to do that. Certainly the media does.
Yeah, the media also looks at too small of a sample.
Mm.
But really, you never want to look at averages. That's where you get in trouble. But
Yeah.
when you dive into price range, markets, areas, you really get to see trends, and you want to stay ahead of the trend.
And so you're saying, so what you're saying is the trend among more expensive homes. And so in the Bay Area, we're talking about over 3 million. Maybe there's some price softening going on, and is that an economic leader about what may be happening, or is it just an anomaly based on the fact that prices have been going up for the better part of 5 or 6 years now, and maybe we're seeing some topping out,
And maybe
in
the
that
Yeah.
cash buyers they're already done.
Yeah, well, also millennials are starting to jump in. So again, pricing, the lower markets are
Moving.
hot, but also, I mean, they're so complicated. It just triggered something. I lost what I was going to say.
That's bad to do on the radio.
Yeah, bad to do on the radio. But it's the truth because I was actually listening.
That's okay.
Problem is when you
That's
listen,
right.
you don't know what you're
But
going to say.
I could see those lower end prices moving just because they're not even that low end anymore.
Yeah.
You know.
Oh,
Well,
and
we got rising interest rates, which is really triggering kind of a mad rush for the door to get in on those. It's like if you were waiting a lot, I'm trying to save up enough for a down payment, and then you see mortgage rates ticking up, and you see your affordability going down. I went through the same. When I bought my first house in 1986, I had the same situation where interest rates at the time were going up, and so I just leapfrogged and
Yeah.
said, hey, parents,
getting
can
people
I
off the
borrow
fence.
some money to
Yeah.
to get in on this house?
Gotcha.
That's part of what's going on. It's getting people off the fence, but that's not the whole story. I mean, San Mateo has actually surpassed, as of this month, the rest of the
yeah.
Bay Area is the highest in the Bay Area. And it used to be, at one point it was Marin and San Francisco.
Yeah.
That's tech.
Yeah, exactly. That's what's driving it. Okay, here's our first trivia question. Talking celebrity trivia here. What Hollywood power couple announced they were separating on January 7th, 2005? You got to name the couple. All right, you'll know these people. Call 888-912-1190. If you're the first caller with the correct answer, you're going to win that tanning certificate, which is worth over $100. So that's our trivia question. What Hollywood power couple, I guess that's a term people can use, a power couple, announced they were separating on January 7th, 2005. All right, you have to kind of think of those in those terms. All right, don't touch that dial. The best of investing is going to be right back. All right, so that's our first segment.
Jennifer Aniston, Brad and
Brad
Jen.
and Jen, probably.
That's
Yeah,
it.
Was it?
Good.
2000.
Or no? Is that it?
That's it.
Oh my God. Crazy. People were running around, at least what I read in People magazine, people were women wearing t-shirts. Team Jen. Team, what's her name? I can't even think of her name.
Team Angelina.
Angelina.
Oh,
On. It's
that
none
is
of our
so
business.
funny.
Yeah. I mean, they're
It's
just
actually
going
pretty
through
funny, I
stuff.
gotta say.
Right, where are we going on the?
I would have been a
next one?
Team Jen, by the way.
Me too. Everybody was Team Jen.
Yeah.
You gotta love her. I mean, poor darling, what happened?
Got extra pen or pencil over there? I can
But of course,
bring my tool.
it's a blue. It's not a red ink, though. Sorry.
Chipped.
Gotcha. All right. Yeah, I saw one of these film things on CMCM, and it actually worked out pretty well. I mean, it's just like what I'm looking at on film right here.
So how are we doing this? I mean,
Well, I've got the
Oh,
camera
there's
right
the
here.
camera,
Yeah,
okay.
and so I can see both of you, and I can see just my profile here.
well, you should be in it too.
I am. I mean, I can
But-
see just this half of my face. I'm like the Phantom of the Opera.
I
just this half,
know,
you know?
exactly.
All right. Do you have a deal in the week?
No.
Okay. But there was. I mean, I remember
I might
hearing.
be able to
from-
think of one.
Yeah, I remember.
Off,
Well, there's the one in El Dorado Hills where they put down 600, and they just needed a $200,000 first mortgage on an $800,000 purchase. The reason they couldn't get financing was the 600,000 was given to them as a gift, and it wasn't seasoned long enough.
Yeah.
And the trivia question not trivia, but the email question we have for you, Mark, is I'm an individual investor, but I am getting frustrated with brokers who tease me with a deal where I say yes, only to find the broker gave the deal to somebody else. What can I do?
Okay.
Act faster.
Yeah, no, and even that.
Oh.
It's the answer. Yeah, you answer right away. Yeah, I'll take it, and they go, sorry, too late.
Oh, well,
It's like,
it's the market.
yeah,
Yeah.
that's one of the reasons why you go into the fund.
Yeah.
Okay, and then Penny, we'll get you your email a little later on because again, it's the I'm feeling the real estate slowing down on that. Okay.
What would you say? What was your question about the real estate slowing down?
Yeah, just
Which we sort of talked about,
sort of talked
We'll
about.
get back to it.
Yeah, we get back to that later. Okay.
I can talk a little bit about a couple of it's conference season, going to conferences and listening to people predict about where we are in the market cycle.
All right.
I think we're at the top of it. I really do. I mean, it's the second, now it's, I'll talk about that, because it's the second longest period of economic prosperity ever.
Yeah.
And we've gone this, and it's been 6 years of rapid appreciation.
Yeah.
It's
I know how
happening.
how much more can it get sustained?
Yeah. It's just, and seasonality isn't what it was. We can talk about that too, you know.
Okay. We'll use the report on that. Get the little announcements here. Here we go. Welcome back to the Best of Investing. I'm Edward Brown, your host, along with Mark Hoff and Patty Cohen. First trivia question was talking celebrity trivia. What Hollywood power couple announced they were separating on January 7th, 2005, to which we all just cried?
Yes, Team Jen, Team Jen.
Yeah, that's right.
Brad and Jen.
Brad and Jen, that's right. Brad Pitt and Jennifer Aniston. I want to make a quick mention here for the San Francisco Symphony. So pianist Kirill Gerstein brings his extraordinary technique and musicianship to Brahms' Piano Concerto No. 1. Opens with a mighty force, settles into spiritual contemplation, and concludes with a jaunty finale. That is jaunty, yes. That is May 25th and May 26th at 8 p.m. at Davies Symphony Hall.
I had no idea Brahm was jaunty.
Yeah, that's right.
Little skipping his
Learn
heels.
something new every day.
All I know is play the ivory keys. Okay, Mark, there's some conference stuff you want to talk about.
Well, I just wanted to fill the audience in. It's conference season. Second quarter of the year, every year, is kind of when all the conferences, spring conferences for various lender groups, California Mortgage Association. There's a law firm that's been sponsoring some events around the calendar, but they do a spring event called Activate. I was just at that last week. And then we also went to an event that was sponsored by another hard money or private money lender in Southern California, and it was a 4-person panel talking about where, among other things, where they thought we were in terms, what inning?
What inning?
Yeah, what inning are we in terms of this market cycle? And it's frustrating and interesting at the same time in that I think we're all waiting for somebody with some credentials behind them to say, I think we're pretty close to, the top of the cycle, or I see storm clouds on the horizon, or, there's count on a recession in the next, 18, 24 months. And still, and we've talked about this topic probably with some regularity over the last year, still no one on that panel, and these were 4 very seasoned pros in real estate, including one economist, and they said not one of them predicted a recession in the next 2 years. They don't necessarily know whether we're at the top of the cycle. And so I guess the takeaway from that is, we're all trying to learn as we get older from, past experience, especially with economic cycles. And a lot of us, I think, are embarrassed by kind of getting caught with our pants down, so to speak, back in 2006 and 2007, when, in hindsight, the handwriting should have been on the wall. When taxi cab drivers and nail salon specialists are buying homes with no money down, doing liar loans, it ought to tell you something about where real estate is headed. And and it was a horrible correction. The Great Recession hammered a lot of people, and myself included. And we don't want to go through that again. I'm getting too old to go through something like that again. So I don't want to make similar mistakes. So we listen and read and talk to other people in the industry. We're looking around and saying, okay, well, where are we in the current cycle? And I actually think it's pretty exciting, and it's good news that so many people are still optimistic yet cautious.
Yeah.
So the drivers, there seems to be an agreement that the drivers aren't there for a bubble. So housing prices are high, historically high in many markets, but there isn't free money, easy money that's pushing those prices up. It's really borne by low unemployment,
Wages are high.
and high wages, and scarcity of product, along with the fact they're not making any much new product.
And
They're
the
not
interest
keeping
rates have
pace.
not skyrocketed.
And interest rates are
Right.
still historically low. Now, interestingly enough, this past week, the headlines were mortgage rates at a 7-year high. So we've had a spike in the 10-year this past week and a spike in 30-year mortgage rates. So now they're at a 7-year high. But what's a 7-year high relative to the last 30 years? So most of us fondly remember our 8% mortgage rate or 6% mortgage rate. And
I remember anything less than 10, people were
Oh,
ecstatic.
yeah.
Yeah.
I
So
remember 17 and 22.
So it's I think that the signs are pretty strong that would indicate that we may end up in this current economy, this current I think it's going to be the longest post-time upward tick in the economy, the longest expansion, and we've got another year to go. If it makes it to July of next year, it'll be the longest peacetime recovery period. Now, that's not to say that we've figured out how to beat recessions, because I don't think anyone's willing to go that far. I think the economic cycle is still a fact of life and a natural occurrence when certain things happen. And with rising interest rates, if inflation starts to follow, we may see the Fed continue to raise rates, which at some point will cause recessionary factors to kick in. So the thing that we can all hope for is that the next cycle will be short and sweet.
Yeah. Well, one of the things
not too deep. Sorry.
That's it. Well,
Yeah.
Short and sweet, indicating not deep.
Yeah.
That last recession, the thing about it was in real estate circles, it wasn't so much a crash as it was a prolonged downturn that went on for 3 years. And so in that time, many neighborhoods in the Bay Area saw as much as 50 to 60% below their prior high, which was quite upsetting to those of us in the real estate industry at the time.
We're gonna get to another break here pretty soon. When we come back, Mark, you've got a deal of the week where it's kind of unbelievable how conservative this deal was and how a bank just would not finance it. So it kind of gets back to what you were saying, is that even during quote recessionary times, there's still deals to be made. We're not in a recession now. We're in decent times, and for some reason, a bank would not make this loan. We're going to find out about that story when we come back. Want to make a quick mention here for whitewater rafting for the Mother Lode. Have you ever done whitewater?
It's so much
It's
fun.
so much fun. So get this, the whitewater rafting is the ultimate team sport, and since 1972, Mother Lode River Center has been running river trips from mile to mile on the American River. And it's an ideal choice, of course, for birthday parties, family vacations, or adventurous day out with friends. But get this, the Mother Lode is the only rafting outfitter with an on-site zip line and high ropes challenge course. Check them out, 530-626-4187, or go to MALODE.com.
Malode, I love it.
Malode. Isn't that great? Okay, second trivia question is, what celebrity had to issue an apology after her T-Mobile Sidekick 2 was hacked and all her celebrity friends' phone numbers, which had been stored in the device, were posted on the internet? 888-912-1190. Answer that trivia question. That's a no. We're going to be right back.
I sort of have a deal of the week kind of.
Oh, do you?
too.
Good. Okay.
And it actually is about a lender, and would absolutely kind of alternative would be private money.
Okay.
It hasn't fallen apart yet.
What were the
actually.
metrics on that one? Did you invest in that one, Edward? Because I don't
Yes.
remember that one.
Yeah.
So
So
it
the
was
purchase price
200,000?
was 828, and they were putting no, it was like 815, and they were putting 600,000 down. They did a $200,000 first mortgage.
So I can just use round numbers.
Yeah.
It was 800,000. $200,000 first because
The 600,000 was given to them as a gift, and it hadn't been seasoned long enough. In the
how do you season a gift?
I guess someone gives you the money, and then you let it sit in the bank for 3 months, 6 months, and they had to close on the deal faster.
It was
than
a
they,
$600,000 gift.
Yeah. Good old mom and dad.
Yeah.
So it was in El Dorado Hills, and a beautiful property. And the guy was getting it at a little bit of discount because it was a model home, and they were throwing in all the furniture.
Oh,
And it was
Oh,
beautiful
it's a model
furniture.
home. Wow,
Yeah,
interesting.
yeah. So he's getting. That's one of the other things. He was getting a little bit of a discount. He had to get it quickly because if they wanted to get rid of the model home.
Mhm. What if they have appraisal issues? If the personal property was tied in?
No, I mean it was maybe $50,000 worth. You
Yeah.
know, I mean it's not super, 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 tricked out, but it
Yeah.
was nice enough to where you didn't have to buy anything.
That's great.
a brand new home.
Exactly. You know set?
Yep.
Here we go. Welcome back to the Best of Investing. One more time, I'm Edward Brown, your host, along with Mark Hunt and Patty Cohen. Second trivia question about celebrities. I guess, Patty, you said you know all these answers, huh? What celebrity had to issue an apology after her T-Mobile Sidekick 2 was hacked and all of her celebrity friends' phone numbers, which had been stored in the device, were posted on the internet?
I just remember the incident. I'm really not that celebrity type person.
Yeah.
People Magazine
What
subscriber.
celebrity was it?
I don't know.
Oh, you don't remember?
No,
Oh,
I just
okay,
know
thought
the
you-
incident.
The incident, okay. February 2005, and it was Paris Hilton.
Oh, right.
Okay.
Okay.
These are old celebrity questions.
They are. Well, the last one goes back to 2001, which I think we'll all know the answer to.
Right.
All right. So, Mark, we teased the audience a little bit with the fact that you had some smoking hot deal of the week.
Well, it's interesting that a lot of people, when they think about hard money loans or private money loans or alternative financing, generally think that the situation is it might be high percentage or risky financing. money. So that was, we were pretty thrilled, and I had to call and congratulate him for being so clever as to offer their home in Bitcoin.
Did
I
they
did
get
it
the
the
whole?
other
Did they
way?
get all?
No. It was just the press that they agreed to accept Bitcoin in payment for their house.
That's
So
great.
they ended up selling it to just a normal buyer
For a lot less,
Yeah.
probably.
Well, a lot less. It depends on if they had taken Bitcoin at that time of close.
Yeah.
If Bitcoin had gone down afterwards, they would have lost money. I mean,
Sure.
that's the
Well, the thing is,
danger
you can
of
take-
buying in Bitcoin, is that if you buy something when Bitcoin is at 20,000 and it goes down to 10.
Well,
Right.
here's the question: if you get Bitcoin, how quickly can you sell it?
Yeah, exactly.
Right? Because in theory, someone could just sell their Bitcoin and buy your house. With
Yeah, the
cash.
biggest challenge with Bitcoin now is it's not as liquid as it should be. It's not as easy to liquidate it. So if someone paid me, for a product in Bitcoin, okay, well now I want to convert that Bitcoin
Exactly.
So
to
risky.
US dollars because I'm not, maybe I want to hold it, but if I don't want to hold it, now I
Yeah.
have to cash it out. Well,
Or
if it
transfer
takes me
to.
3 to 5 days, and that's what I'm hearing, it takes 3 to 5 days.
Well, that's even
convert
3
it
to
to
5 days
cash.
is not bad.
And
I
when
mean,
you're talking like a $5 million investment for a lot of
Well,
people,
that-
that's all they've got.
yeah,
That is so
that is
risky.
ridiculous.
Well, 3 to 5 days
Yeah.
to convert to US dollars is not efficient if you want to use, if Bitcoin is to be utilized like
Cash.
cash, like US dollars. There's,
Well,
US,
take the Bitcoin and then buy something else with it.
Yeah.
That you can convert, like a car
Yeah.
or something that you can convert a lot faster.
so the practicality of it is still open to question.
Yeah.
And right now it's really basically like a virtual gold. It really doesn't have a
Yeah.
huge amount of it's hard to use it as currency. It's really being treated like a virtual gold. So I'm going to invest in this virtual gold and hope that it goes up. Well, why does it go up? Well, there's scarcity because you can only mint X number of millions of Bitcoins. But still, okay, well, scarcity, if that's the only reason why it has value,
Yeah,
well, it's
that's-
scarce, and I think it might be worth $100,000
So are
for 5
herpes trade. I wouldn't get money on that either.
It's not. I
I just-
run, don't walk.
I know someone who invested $100,000 in computer programs to try to mint Bitcoin.
Yeah.
And then the thing is, the electricity alone cost, and I don't even understand all of that.
Oh.
Well,
Because you can
apparently
mint it.
each
I don't either.
successive coin to mint takes more computer cycles, and computer cycles use electricity.
Yeah.
And so today, the cost of
Interesting.
minting a Bitcoin is much higher, and it apparently goes geometric
And
too
then
as
how
well.
do you mint it? That's what I don't understand. How do you fund it? Is it like 4-leaf clover or something?
Such a Luddite.
I don't know.
Yeah,
I really
I don't.
Not that I
I should be
can
more
explain it.
educated on
Can you
this,
explain it?
No, I can't.
No. Okay.
Yeah.
So,
but I don't.
audience, we also don't know how to mint Bitcoin. If you do know, could you
Don't ask.
email
I was
us?
cooking some up in my kitchen last night. Take to yourself.
It was tasty.
Tasty Bitcoin. All right. And with that, we're going to cut out for the day. We'll see you next week.
Well, we just showed our ignorance on
All right.
Bitcoin, but